Okay. So we are on record now. Thank you very much. So I'll begin tonight's presentation on Forex strategy, the London session. My name is Jeremiah Kendagor, a Forex trader, and excited to present to us this strategy on how to trade the London session. It's a specific strategy that focuses on trading pound pairs. Okay, it is a much talked about strategy that is online. If you Google, it's normally referred to as the London breakout strategy. Okay, all right. So without much ado, before I begin, I just want to present to us this disclaimer. All right. In Forex trading, we don't want to make wild claims. We also want to warn people that Forex trading on margin carries a high level of risk and may not be suitable for all types of investors. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. I'm not giving any trading or investing advice. All right, so I'm not giving any recommendation. This is purely for educational purpose, all right? We are normally meant to keep this kind of disclaimer wherever we talk about foreign exchange because of the risks that are involved. But that said, I am very excited to present to us this trading strategy. But before I delve into the strategy itself, I'll just want to mention a little bit about money management in terms of trading foreign exchange. All right, again, I believe that probably most of us who are here in this training probably have some level of understanding about how the foreign exchange market works. But so I will not belabor much about the basics about foreign exchange trading, but I believe that we all know about foreign exchange trading and the things that we need to do. All right, the other thing is I just need to be comfortable with the whether there are any chats. If you have something that you need to tell me, you can post it on the chat. I will be looking there once in a while so that I don't lose anyone. So in foreign exchange, one of the most important things is money management, and that is how to manage your risk. You can make money, but you can also lose it big time just because of risk management. So for this particular strategy that we are going to discuss, the lot sizes that you are supposed to use is 0.01 lot size per $100 balance. All right, so you can work it out. If you are talking, if you are dealing with $1,000, so it will be 0.1. If you are dealing with $10,000, you will be talking about one lot size. Okay, I will not explain about lot sizes in this particular training. We probably will focus that on a different time. Now, this particular strategy will enable you to place 5 trades at a go. So the maximum number of trades will be those 5 that you will open at any given time. If one closes, then you are free to open another trade if you'd like to open a trade, another trade. All right. Trades must have a stop loss. Okay, sorry, that losses is misspelled, but every trade will have a stop loss. And the stop loss is normally between 20 to 25 pips, but that will depend on how the market will have presented to us. And I'll talk about that briefly as we delve into the strategy itself. All right, so if it is 30 pips and you are doing 0.1 lot sizes, 0.1 lot sizes gives you $0.1, okay? So 30 pips times $0.1 given by the lot size that you have taken times 5, the 5 trades that you have will give you a risk level of $15 per $100. It's a little bit high, but you also have a potential gain of 20 plus 30 plus 30 plus 30 plus 30 times. Oh, this is where I go wrong. Okay. This one should be 0.1. Somebody has noticed that mistake. This should be 0.1, so this should be $140. All right. I think that is that's my mistake. So actually, the gain is not 1-to-1; it's almost 1-to-100. Okay, that's a typical error. I will amend that, and I'll give you this presentation after this presentation. All right. The other thing that I need to mention here is that always remember that there is no one strategy that is the magic bullet in foreign exchange. All our trading strategies have a failure at some point. So normally it is how you manage your strategy very well. So even this particular strategy that I'm presenting to us tonight, yes, it works very well. In fact, I tested it this past week, and it had a great return. Okay, and I can allow you to go and do a back testing on this particular strategy, and you will see that the returns are quite very crazy. Okay, so the most important thing that you realize here is that there is no holy grail in foreign exchange. Okay, and that brings me to my last point here on risk management, which is that trading is 50% mental, 40% risk management, and only 10% skill or strategy. All right, and if we understand that, then we can more manage our trades a bit more. So without much further ado, let me delve into the strategy that I want us to discuss today. And this strategy is not my personal strategy. I got this strategy from one of the top trainers in iMarkets Live, Bas Koijman. All right, and those of you who are in IML, I'm sure you've listened to Bas Koijman, and he trains about the London daybreak strategy. So this is the one that I want to present to us today because I think it's a very powerful strategy. Now, there are many London daybreak strategies that are there online, but I found this one of Bas Koijman the simplest and the easiest and the most practical and the most direct. Now, before I even talk about this strategy, I want to mention why I think this strategy suits us very well. Okay, the first thing is that we are talking about the most volatile or the most active foreign exchange session market in the world. Okay, those of us who know about foreign exchange, you know that there are three main active sessions. We have the Asian session, which begins, and then which is almost going to begin tonight at 2 o'clock. And then we have the London session, and then we have the New York session. And among all the three, the London session is the most active. And I always say that we in Kenya, that is Africa, Europe, and Middle East, are well more placed to trade this market because it comes on when we are awake. Okay, people in the US will have to wake up early at night, okay, like 2 o'clock to be able to trade the London session. So the strategy is simple, okay. It does not require you to have a lot of technical knowledge, okay. So some of us normally have so many strategies that we normally have that requires you to do a lot of charting, a lot of drawing of lines and so on. But in this particular strategy, it's quite simple and you don't have to do a lot of technical stuff. Okay, In fact, the only thing that you need to know is how to place a pending order. Okay, how to place pending orders. More specifically, how to place a sell stop and a buy stop. All right. You can make as much as 500 pips per day. Okay, I have actually calculated that the whole of this week. In fact, we will go through those calculations just in a moment. All right. And the main pairs that we are trading are the pound pairs. That's the Great British Pound pairs, the GBP pairs, which are the most volatile pairs in the foreign exchange. All right. The strategy does not require you to predict the direction of the market. Now, this is a very powerful plus for some of us who are new to foreign exchange. So you don't have to predict where the market is going. You don't have to draw trend lines. You don't have to see where it's going and so on. You just place the trades and you pick your money just like I'll be mentioning. So far, if you are with me and you are following what I've discussed, maybe just type in there 111. All right. Okay, I'm waiting for your 111 to see whether we can move on to the next slide. Now on how to put the strategy. Thank you, Sophie. All right. Now the strategy is very simple. Okay, the strategy is very simple. You need to observe. It works on the 1 hour time frame. All right, it works on the 1 hour time frame. So what you need to do is observe the 1 hour candle, which is between 8 and 9 London time. And that is for Kenya time, it is between 11 and 12. So you are observing that particular candle as it is forming. If you can see the candle here that I've drawn, so if the candle is forming like this in the between 8 and 9 London time, which is 11 and 12 our Kenyan time, you observe that particular candle. All right. This candle plus its wicks should not exceed 35 pips. So if this particular candle, including its wicks, is more than 35 pips, so you just measure from the top to the bottom. If it is less than 35 pips, then you can enter. If it is more than 35 pips, that will not work for us because that will exceed our stop loss level. Now, so what you do is that you place your trades, you place a buy stop 5 pips above the high of the market. That is above the week, the end of the week, right here, okay? If you can see what I'm pointing at, that's what you do. So you place a buy stop above at this point, and for this particular buy stop, its stop loss will be 5 pips below the low of the market. That's why here I've said that the buy stop is placed 5 pips above, and it is also where you place your stop loss for the sell. The sell is you place your sell stop 5 pips below the low of the market, which is also your stop loss level for the buy stop. All right. If you have understood me so far, maybe put in there 2 to 2, and then I know that we are together. All right. So the next point is what is your take profit? When you place your buy stop, your take profit are as follows. For GBP USD, the take profit is 20 pips. All right, take profit is 20 pips. For the GBP, the rest of the GBP pairs, and we trade the next 4 of them, that is the Japanese yen, the Canadian dollar, the New Zealand dollar, and the Australian dollar. For all these, your take profit is 30 pips. All right. So stop loss is the opposite entry. Okay, stop loss you place it where the other entry is. Now, the other thing that you do is that when the buy or the sell order is activated, you cancel the other trade. All right. So basically, that's the strategy. I've completed the strategy. Anything else, unless you have a question, probably if you have not understood, you can still review, and I'll be sending you this particular PDF so that you can have a look at it. All right. I now need to go to the next session, the next slide, which is basically how do you manage the trade? There are a few things that you need to observe either before or after you have entered your trade. Okay. So if you are with me so far, put in there 222. All right. So how to manage the entry of your trade? You look at Forex Factory, okay? And you need to look at the high impact news that affect the pound pair, okay? Like if you check, I've just checked this. This is the current one, the Forex Factory. It shows you the high impact news for pound. So on Monday, tomorrow, okay, there will be the final manufacturing PMI that will be announced at 12:30. So most likely, we normally say that for you to enter these trades, if there is a high impact news, probably like this one here, you enter your trades after the news, okay? So you will enter your trade at 12:30 or thereafter, hoping that by that time, probably your 5 pips, your trade levels will not have been triggered, because you are talking about the new candle after the 12. Because by the time we are looking at we are at 12, we are beginning the new candle after the one that we are observing. All right. Okay, so if your trade is in profit 10 to 15 pips, you move your stop loss to break even. That is, depending on how much your broker fees are. If your broker fees are requires 1 or 2 pips, that's where you place your stop loss. You bring your stop loss there, so that you are now on a risk-free trade. All right. So that's something that you need to observe. Then remember at that point to cancel your opposite pending trade. All right. Sawa sawa. If we are together again, thank you. And I can see some of us are following. Now I want to do a back testing. This is the actual back testing of this past week, and how much did this particular strategy make. Now, this is my profile for the 5 currency pairs. This is pound against US dollar. This is pound against AUD. This is pound against Canadian dollar, pound against Japanese yen, and pound against New Zealand dollar. All right. Now, the other thing that I'm using here, I have an indicator that gives you the market sessions. The golden color here is the Asian session. The I don't know what this is, grayish, whatever color in between here, that's the London session. The green one is the New York session. All right. So I will go into depth as we do the back testing on this. All right. So I am doing a back testing from 25th to 29th this past week. All right. And I will begin with the pound. All right. And see, this is the pound movement with all those particular. These separators here are the different days that we are talking about. So I'm actually doing from the 25th, which is this particular area here, followed by this, followed by this, followed by this, followed by this. All right. So let's do the first 2 days. On Monday. All right. On Monday, the 25th. The candle that we are observing is this particular candle here. You can see this is the Asian session, and this is the London session that we are talking about. So the candle that we are interested in is this particular candle here. that is enclosed by this color blue background, all right? And I have measured from the tip to this level here is 5 pips. And from this entry level that we will have entered, we achieved our 20 pips here. And the market actually went ahead and gave you more pips. Actually, I think the market did almost 35 pips that day. You would have actually gotten 35 pips, but what we say in this strategy is don't go for more than 20 pips. Just take your 20 pips and go home, all right? All right, so Monday, done, 20 pips was in the pocket. Tuesday, what happened on Tuesday? Again, this is Tuesday, this is the 26th, okay? If you can check that, that's the date 26th. And which candle are we observing again? This one, where London session begins, the first hour of the London session. And this is the tip of the week. These are 5 pips. From there, 5 pips, I count 20 pips, and that was achieved very easily in the fourth hour, okay, of the London session. So 20 pips on Tuesday was done. Already banged in 40 pips. Let's go to Wednesday. Wednesday, what happened? The same thing. This is the candle we are observing. The strategy was triggered at this point, and we achieved our 20 pips here. But the market went ahead and actually did more than, I think this is more than 100 pips, all right? It did more than 100 pips that day. If you have other strategies that you use to follow the market, you can do that. But for this particular strategy, you are satisfied with your 20 pips and you go home, all right? On Thursday, what happened on Thursday? Again, you observe this candle here, the first candle, and the market got triggered at this point here, 5 pips from below that. You entered your sell stop, and your 20 pips was achieved here. Again, about 4 hours into the London session. Is it 4 hours? This is 1, 2, 3, 4. Yeah, the 50th hour was achieved. 20 pips again on Thursday. All right. Now on Friday, okay, and interesting enough, Bas Koitman, who is the one who talks about this particular strategy, normally says you don't trade on Friday, okay? And on Friday, the market actually triggered both ends of the before reaching take profit. It triggered, the initial trigger was on a sale, okay? So we sold here, and it came further, came down here about 10 pips, about 14 pips down here. So if you are trailing, stopping, if you had put your stop loss at a break even, you probably would have gotten out at no cost. But if you had not put your stop loss at break even, your stop loss would have been activated at this point here. All right, your stop loss would have been activated at this point here, and so on Friday we lost 30 pips. Actually, when you count from here up to here, that is 30 pips. So we lost 30 pips. So the total amount of pips that we made for pound US dollar last week would have been the 20 minus 30 would be 50 pips. All right. And that, for those of you who are traders in this market, you know that's a good return. All right. If you are following me so far, put in there 111. All right, let's go to AUD. All right, let's go to AUD. AUD, let's look at AUD. Thank you, 111, Lillian Okado. All right, the rest, you are not catching up? Am I going too fast? Anyway, AUD, again, we are looking, and you can see how these currency pairs move. They actually have serious moves every single day. Every single day, they have serious moves. every single day. So let's see, Monday, what happened with the AUD? AUD was triggered at this point. We achieved our 30 pips so early in the day, and the market still went ahead crazily up, all right? So if you have other strategies that can help you to track this market and make more pips, fine. But for this strategy, you take your pips and you go home, all right? The next strategy, the next day, that's Tuesday, 30 pips was achieved very easily. Again, the market was triggered at, where was it triggered? Yeah, this is the candle here. It was triggered at this point, and you achieved your 30 pips easily on the third hour. 1, 2, 3, the third hour, okay? By the way, it almost triggered I actually had to look at this particular spike. Most of you see this this pin here. This pin would have triggered our stop loss, okay, for this trade. But if you actually split it up, if you split this particular candle into 5 minute candles, you will realize that you will have achieved your 30 pips before the market had a spike up. All right. So does this mean different GBP pairs achieve different pip counts? Yes. Lilian Okado, yes. For pound, US dollar, for GU is 20 pips, but for all the other pairs, it is 30 pips. All right? Yes. Yes. All right. Okay. Okay. Now, the Wednesday, again, we achieved our 30 pips for AUD easily. On Thursday, we again achieved our 30 pips easily, very easily, right here. And on Friday, we again achieved our target very easily. Again, for AUD, great day, we actually achieved our 150 pips for the week. All right. Now, let's look at Canadian dollar. Again, look at Canadian dollar. It has very huge moves every single day. Every single day, there are huge moves every single day. Right, Monday, again, we achieved our target. Tuesday, we achieved our target, 30 pips. Wednesday, we achieved our target. Thursday, we achieved our target, all right? And Friday, we hit stop loss, all right? So we lost 30 pips on Friday. So the total for Canadian dollar is 90 pips. Again, Bas Koijman says that it doesn't trade this strategy on Friday. But I found that some of the other pairs actually achieved their target, all right? All right, and we are talking about the first hour candle in the, yes. We are talking about the first hour candle. Sorry, wait a minute. Yes, the first hour candle, the first hour candle of the New York session. That is
New York,
8 to
London, New York.
8 to 9. Sorry, let me type that. 8 to 9 a.m. London, which is basically 11 to 12 Kenya time. All right, 11 to whatever Kenya time. All right. Okay. So for the Canadian dollar, we achieved 90 pips. Again, I will not be surprised why Bas Koijman changed his location to Eastern Europe so that he is able to trade this London session. All right. Now, Japanese yen, let's look at the Japanese yen. The Japanese yen Monday achieved its target. All right, this is the first hour of the London session. On Tuesday, it achieved its target again. This is the first hour of the London session. We again triggered here and achieved our target. On Wednesday, we achieved our target again. It got triggered here and we achieved our target. On Thursday, we again achieved our target of 30 pips. On Friday, we hit stop loss. All right? No wonder Friday you can choose not to trade. Okay, and this 90 pips was achieved. Okay. Thank you for the clarification. Yeah, right. Okay. NZD actually is my best bet on this particular strategy. Actually, for NZD, probably you can even target to do 40 pips instead of 30, but that is not how the founder of the strategy says. The founder of the strategy says 30 pips, so we do 30 pips. But if you can check here, it actually does more. All right, so Monday, 30 pips done. Tuesday, 30 pips done. Wednesday, a lot of pips were left on the table. A lot of pips were left on the table. You know, if you are a trader, you feel very bad leaving money on the table like that. But anyway, Thursday, target was achieved very easily, all right? And unlike all the other currencies that lost on Friday, actually, NZD achieved its target by far on Friday, all right? Achieved its target by far on Friday. Okay, so how many pips did we achieve then? We can count them up. For pound, we did 50. For AUD, we did 150. For CAD, we did 90. For Japanese yen, we did 90. For NZD, we did 150. Total 530 pips. Guys, if that does not excite you, I don't know what else can excite you. But anyway, as we normally say, past performance has nothing to do with future performance. But still, I think this is a strategy that one can really have a serious look at and see what you can do. In fact, if you can combine this particular strategy with the pivot strategy, actually, and that's what Basco Hitchman normally does. He has two targets. The first target is fast resistance or fast support, whichever you are trading. If it's going up, its fast resistance is your first take profit. Second resistance is your second take profit, and so on and so forth. So you can even do twin trading for this particular strategy, and you can actually achieve more. Just like I was saying, you can actually pull in more money on this strategy. If you can actually check what we had looked at, we left money, a lot of money on the table. Yes. Pullback is there. Pullbacks are there. Pullbacks are there, but in most cases, never triggers the SL before continuation. I'm trying to type also on the on the chat. I hope you are catching that, Lillian. Yeah. No, not 40 pips. If if that first candle is more than 35 pips, you do not enter the trade. All right. If that candle you are observing is more than 35 pips, it negates the trade. That candle has to be less than 35 pips, and I found that most of those candles are anywhere below 25 pips. All right. Anyway, okay. Thank you, Lillian, for those observations. All right. Okay. Sorry, this one here got mangled up briefly. Probably I could Could you give me a moment to adjust this? But I will adjust this on the presentation before I send it out. But basically, what I was looking at here is, by the way, are we okay to move on? To move on to now, guys, I want to move to the next level. If you are okay, type in there 111. Okay. I just want to analyze briefly what 530 pips would mean on your account. Yeah, last question. Yes, yes, yes. Sorry. Okay, yes, yes. Yeah, Lillian, I realized you joined in after we started the first slide, Cindy. Because most of what you're asking was covered in the first slide, and in any case, anyway, I'll send the slide to all of us, and you should be able to see that. All right. So now the compounding factor. If you are doing 500 pips per week. If you do 500 pips per week with trading a lot size of 0.01 per 100, you actually achieve $10,000 in 3 months. All right? This is what I'm talking about. So if you start with 10,000 Kenya shilling, in 3 months, you will have 1 million Kenya shilling. If you heard me loud and clear, type in 111. Okay, I've actually finished my presentation. Actually, we can now, I can unmute everyone, I think, and then if you have a question, you can actually type in, you can, let me unmute yourself actually, and then maybe you can ask a question before. If you need me to review any one of the slides, I can do that. I repeat the compounding. Okay. All right. So this is the week. I'm only saying that my presentation got disaligned slightly. All right. So you are not seeing what you should be seeing, or the way you should be seeing. So week 1, you trade you trade $100. The lot size is 0.01. You will get 50 pips. 50 pips for that week. Okay. So this 50 pips is added to your account. So your account now in the second week is $150. $150, you would still be trading 0.01 lot sizes. Again, you will get another $50 the end of that second week. This $50 is added back. So on the third week, you will be trading $200, meaning that you will now be able to place in lot sizes of 0.02. And so you will be able to make double the amount, which is $100. $100 put back on week 4, meaning that you will have $300. So you will be trading 0.03, and you will achieve $150, giving you $450 in the 5th week, meaning you will be trading 0.04 lot sizes, earning you $200, bringing you to on the week 6 at $650. I think some other numbers have been hidden down here, but when I send you the slide, you will actually see that on the 13th week, if all this happens as they are, you will actually be having $10,000 in your account. $10,000 in your account. All right. That is the magic of compounding, starting with $100, and that's only 10,000 Kenya shilling. All right, but you probably will need an ECN account, okay, a broker that gives you ECN, type of account, and these are some of the brokers that I personally use. FX Primers gives you an ECN starting from $200. Maybe Lilian Okado can correct me if I'm not wrong. For ECN account for Primers, that's at $2,000. For IC markets, you can have an ECN account with any amount, even with $100. For XNES, you can you start having an ECN account with $2,000. Okay, thank you. So it's $200. Wow, that's fantastic. So I need to change this. FX Primers gives you ECN from $200. Okay, which is a good place to begin. That's only 20,000 Kenya shilling. All right, and in 3 months, you probably then will be having double what I mentioned, probably more, maybe $20,000. But anyway, I don't want to, as I said, that the risks are there. You only need to observe what you need to do. All right. So I don't know if there is any other thing that I've missed. We will be sharing some of the strategies that we have on this chat group where you got your link today for this particular presentation. We also have a WhatsApp group there. All right, and that is it. So I don't know if there's any other question or there's any other thing that you want me to look at, any chat. If you need this particular indicator that I'm using to separate the days, or my setup that I've presented today, you can always inbox me. I can send you these setups and the indicators for your use. All right. And that's it. That's it for the presentation. Whenever I come across any nice simple strategy that can give you money in your pocket, we shall always be sharing. The other strategy that I also look at is the pivot strategy, especially the one that is in IAM. IAM has a very, very powerful pivot strategy, pivot scanner that gives you the best entries for trading. And probably I will do another Zoom on the strategies, the full strategies that we normally use to trade in this. So thank you, everyone. Thank you. If you found value on this, put in there 111. And if you have anything, if anybody wants to say something, maybe you can say. Lilian Okado, would you like to say something before you leave? Before everybody else leaves, maybe I can unmute you. Yeah. Oh, yes, Lilian. Sorry.
Good evening, everyone.
Good evening. Good evening.
Good evening. I just wanted to say thank you very much, Kendago. Yes, I jumped in a bit late, but I caught up. But the training was very simple and very, very good. So I personally got a lot of value, and I'm going to test the strategy this week. I mean, it's very simple. It makes a lot of sense. And I just want to say thank you on behalf of everyone for just taking the time to learn the strategy for us and come and share with us. So thank you. Asante sana.
Welcome. Thank you. Thank you, Jim Mutahi, my colleague. Thank you for being in the meeting also. So thank you, everyone. Bye and happy trading this week. And good night.
Kendago, you'll share the PDF?
I will.
Okay, fine. Thank you. Good night.
Okay.